Definitely not. When or if the interests are going to be controlled by the reviewed, I mean the amended banking bill, borrowers should get or should expect much more easy time in borrowing loans, because you see the intention with the bill is to lower the interest rates, which currently are very high, most mainly in the region of between 18 to 24%, which is perceived very high for the ordinary borrowers. So, I mean, having the bills below 14%, as has been proposed by the bill, will be a good thing that will enable borrowers to access credit uh, easily. But on the other hand, there is an issue that is coming up where analysts are saying that banks are likely to shift from lending to the individual borrowers to now buying or investing in government securities, which is now lending to the government, which is perceived to have less risk than the individual borrowers. So now that's another thing that might make it difficult for borrowers to access loans if banks might shift to lending to the government. But it's also good to note that uh, lending is the core business of banks. So it's unlikely for banks to totally refuse to lend to individual borrowers. I would also take the analysts' point of view, because they are saying it's likely that profits will dip for banks, because lower interest rates means lower margins for them, because they've been making um, the huge profits because of the high interest rates, which are enabling them to get more money from the borrowers. So basically, in a way, and analysts could be right by saying that banks should expect their profits to drop, mainly starting from the financial year ended 2016, because they are expected either to reduce the interests by their own volition, or the interest rates will be reduced by law. That is, if the president agrees to assent to it. It's likely for the bill to succeed this time due to political reasons, because we are heading to the general elections next year, and public opinion is directing the president to sign the bill. And considering the fact that there are various proponents from the opposition who are pushing for the bill, the president might actually sign it to avoid uh, the issue of interest rates now being taken up by the opposition to try to clamp down on his decision not to sign to the bill.